Welcome to StockStream's Investor Education Series. This presentation is brought to you by StockStream Financial Services in collaboration with mystockstream.com. Today, we will look at the differences between fundamental and technical analysis techniques. We recommend that you treat the contents of this presentation strictly as educational and informational in nature. We propose that you learn concepts of analysis using StockStream Education's training material, then follow StockStream experts at mystockstream.com to see the techniques you have learned being applied to live markets. Once you are comfortable with a particular technique, we recommend that you conduct your own analysis, get it reviewed by a StockStream expert, and then put it to trade in live markets. Like every other unregulated product that you can buy from the open market, the price of stocks, currencies, etc. are determined by supply and demand dynamics. If there are more people willing to buy a stock, its price will increase, and vice versa. Fundamental and technical analysis are techniques that try to determine the supply and demand dynamics in the future. In the case of Forex trading, fundamental analysis will look at economic indicators like GDP growth and interest rate projections. Technical analysis, on the other hand, assumes that all the information available to the markets has already been priced in and reflected in the charts for the particular currency pair. Technical analysis, therefore, looks to analyze chart patterns to predict price movements for a particular asset. As pointed out earlier, fundamental analysis looks at economic and financial indicators to predict price movements. If you are a fundamental analyst trading in the currency markets, you will be looking at data like GDP growth rates, trade balance, inflation, interest rate expectations, and employment figures. Some of the common techniques used by fundamental analysts include purchasing power parity, theory of elasticity, portfolio balancing approaches, etc. We will be looking in more detail at each of these fundamental analysis techniques in subsequent lessons. Technical analysis, on the other hand, is a totally different ballgame. If you are a technical analyst, you will be looking at chart patterns to identify trade setups. Some of the common indicators that technical analysts look at to identify trade setups are support and resistance levels, moving averages, Fibonacci levels, Elliott wave patterns. We are going to cover each of these indicators in more detail in subsequent sessions. If you have any questions, visit mystockstream.com and contact us at StockStream Education. You can also contact any of our other experts covering Forex, commodity, or Indian equity markets. We will be more than happy to answer any of your investment-related queries. Thanks for listening to this presentation and have a great day.